After a first quarter that saw significant price declines for all base metals, Q2 was a time of recovery on the back of strong Chinese demand. Iron ore was up 23% in the quarter, helped by a strong Chinese recovery and concerns over Brazilian supply. Iron ore prices outperformed expectations, rising to $118 per ton on the 4th of August, the highest level since July 2019. Chinese iron ore imports hit a 33-month high in June, boosted by a sharp rise in second quarter Chinese steel production. Copper, shown here in the yellow line, was up 27% in the quarter. LME copper prices surged from $6,038 per ton on the 30th of June to $6,545 per ton on the 13th of July, the highest level since March 2019. Prices then fell at end July to $6,447 per ton. Copper supply disruptions have eased in Chile and Peru of late, while production from both nations rising month over month in June. Nickel was up 14% in the quarter. LME prices climbed to $13,762 per ton on the 29th of July, the highest level since January. This month's gains were driven by positive sentiment arising from Elon Musk's announcement that Tesla is seeking long-term tie-ups for nickel supply to feed its planned electric vehicle production growth. The sharp reduction in stainless steel output, however, continues to drag on nickel demand. Zinc was up 12% in the quarter. Zinc prices ended July on a more upbeat note, boosted by mine supply concerns in Peru and maintenance outages at Chinese smelters. The upside, however, continues to be capped by expectations for a major surplus in the zinc market. Now, the precious metals, which have performed considerably better than the base metals. Gold rose by 12% in Q2, followed by a rise in Q1, the only metal to do so. We've already talked about the correlation with US Treasury yields, but the investors are also turning to gold as a hedge against expected rise in inflation and US dollar weakness. A further escalation in US-China geopolitical tensions is also dampening hopes for a sharper global economic recovery. Conditions that could be described as a perfect storm for gold have elevated sentiment in both near and medium-term outlooks. All of this has helped gold to increase by 16% so far in Q3 to its highest ever levels, although profit-taking has taken it down back below $2,000 per ounce in the last couple of days. Silver has been the best performer among the precious metals, up 30% in the quarter from an 11-year low it reached in Q1. It managed to reach its highest point since 2013 in Q3. Silver has been able to play both sides of the coin, responding to a rebound in industrial activity and attracting investors as a safe haven asset. Platinum was up 14% in the quarter, gaining from interest from bargain hunters hoping to ride the wave of gold rise, while palladium was down 13% in the quarter as a result of difficult recovery in auto sales, particularly in India. Over the course of July, platinum and palladium prices had double-digit percentage gains, boosted by hopes for recovery in the global automotive production market. So far in Q3, platinum is up 23% and palladium up 21%.